Please welcome and
Yeah, thank you so much. Yeah, thank you so much, Secretary Akshay. The keynote speaker of today's session, CA Risbud sir. CA Isha Sekhri, the key mentor. I will say mentor because she'll be mentoring today us on this particular topic, which is Fcra, the Foreign Contribution Regulation Act. Colleagues in the managing committee, CA Akshay, CA Swarupa, CA Ajay, and all others who are supposed to join. Seniors in the profession, past chairman, CA Aniruddha Shenwai sir, past chairman and past WRC vice chairman, CA Zulpesh Shah sir, and other seniors and my dear colleagues and friends. I welcome you all to this once wonderful meeting, which is in the form of VCM, happening on the topic Foreign Contribution Regulation Act. Friends, I was reading a blog today, The Shrinking World, and I felt that, yeah, the world is really shrinking. We all are coming closer, and at Nagpur, we feel that Fcra is not a relevant topic, but I certainly feel that this topic has now gained much more relevance. And with the passage of time, I personally feel that we all will be feeling the burns of this if we are not, say, exposed to this topic. So keeping these aspects in mind, and to have an overview of what this particular law is all about, we had invited CA Isha Sekhri. Isha has a very good connect at Nagpur. She comes to NADT, and I think by that connect, we are really bonded together. We'll be having more sessions of Isha on other topics as well, because she speaks a lot on various topics. I also wish to thank PR Risbud sir, because on a very short notice, I invited him to be a keynote speaker, and he has accepted our invitation. So thank you so much, sir, for joining here and gracing this occasion. Friends, on the future front, the forthcoming front, we have tomorrow IBDI series happening, wherein the pre-package insolvency topic is being covered by CA Nirja Kartik. We have not many programs planned next week as well, wherein we have on 10th, we have the International Taxation series happening. So 2 days International Taxation series is happening on 10th and 11th of June. We also have the third session in IBDI series on 11th of June itself. And we have another program which is actually proposed by Government of India under the DIPAM departments. So that is basically a Department of Investments and Planning and Management. So that department is conducting Pan-India in 75 program, which is happening between 4 to 6 on 10th of June, and wherein Nagpur branch is proactively involved, which is a physical program. So I request you all to please stay tuned with the efforts of Nagpur branch, the various initiatives that we are taking, and I hope you'll all enjoy learning throughout. So thank you so much, and once again, welcome to all of you. Over to you, Akshay.
Thank you so much, Chairperson sir. As you rightly said, the world is really shrinking, but at the same time, the opportunity and scope of professionals is broadening, expanding. Friends, we have with us CA PR Risbud sir with us. May I now request Managing Committee Member CA Sanjay C. Agrawal to kindly introduce Risbud sir. Sanjay, over to you.
I am audible?
Yes, you are audible.
Yeah. Respected dignitaries and my dear friends, I am profoundly delighted to take an opportunity to introduce chief guest for the evening. He is none other than CA PR Risbud sir. He is very learned personality of our institute. He has been in profession since 1982, means most of us were not even born till then. He was the managing committee member of Nagpur branch of WRC of ICI for the term 2004 to 2007. He also chaired Vikasa, Nagpur branch of ICI in the year 2005. His main areas of practice are audit and taxation. He is also involved in the formation of various cooperative banks in and around Nagpur. He is the founder, promoter, director of Sriram Urban Cooperative Bank. He is also worked as a director on the board of Samruddhi Urban Cooperative Bank Limited. He has been a faculty at various seminars held by ICI on the topics related to banking, cooperative societies, and project finance. He is also faculty at the Regional Training Center at C&AG Nagpur. Some of his hobbies are listening to classical music, yoga, and spiritual practice. Dear friends, I can summarize the journey of Sir in one sentence, and that is, nothing is going to be handed to you. You have to make things happen. So friends, let's welcome an eminent personality, CFPR Risbud sir, with thunders of applause. Thank you. Thank you, sir.
Thank you so much, Sanjay. I now request Risbud sir to kindly address the gathering. Sir, over to you.
Thank you, Akshay, and thank you, Sanjay. I would like to thank the chairperson of Nagpur branch first for getting me this opportunity to be with you this evening. Thank you, Sanjay, for speaking so many good words about me and adding so many adjectives. Thank you very much. Friends, this Fcra Act first came into existence in the year 1976. The need was felt that the foreign donations and the foreign hospitality should be regulated. And that is how the Fcra Act 1976 was enacted. In the year 1984, the President passed some ordinance, and by that, some amendments to Fcra 1976 were made. But that was not enough. In the year 2006, a draft bill was prepared for passing a bill, and that bill was referred to the joint committee of the parliamentary committee. That committee carried out a very good study of that bill, and almost all the suggestions studies carried out that then have been incorporated into the present act, that is Fcra 2010. Basically, the purpose of this act is to maintain the internal security. Now, if you go through the preamble of this act, you will come to know how important this act is, not only for the government, but also for the practicing chartered accountants, those who are certifying the opening balances of the foreign contribution, utilization, and the receipt of foreign contribution by various organizations. If I read out that preamble to the Act, you will understand the importance of the Act. The preamble says, an Act to consolidate the law to regulate the acceptance and utilization of foreign contribution or foreign hospitality by certain individuals or associations or companies, and to prohibit acceptance and utilization of foreign contribution or foreign hospitality for any activities detrimental to the national interest and for matters concerned therewith or incidental thereto. It means the government was of the opinion that the foreign contribution which is coming into India and the utilization of that was being misused by the various organizations, associations, companies, and even for that matter individuals. The preamble itself says that the Act is applicable to the individuals also and not only to the NGOs. It has not been mentioned what are the activities which are detrimental to the interest of the detrimental to the security of the country. But what government has, or in that act, what has been provided is there are certain programs for which the donee can accept the foreign contribution, and those are cultural, social, educational, and economic and religious. So even an individual gets the foreign contribution for these activities. In that case, that individual need to get the registration or at least the prior permission from the Ministry of Home Affairs. And because of this, because of the purpose of the Act, that is to maintain the internal security, this Act is also being regulated by Ministry of Home Affairs. Friends, I've been wondering, in the year around 2010 to 15, at least I observed that people were approaching to the organizations for accepting foreign contribution, and that was a very hefty amount they wanted to give to the organization. You will understand during that period when this act came into effect, 2010, of course, the organizations also felt that it is very risky to accept such donations and not to utilize it in terms of what the government expects or what the Fcra Act 2010 expects you to spend. And that is how, I mean, the misutilization of these foreign contributions and receipt of foreign contributions for the purposes not provided for by the Fcra Act 2010 that was arrested. Now you don't find that the people are approaching to the associations and organizations. But here, a very important point which I want to make is the organizations are not well aware, or they were not well aware of the provisions of this Fcra 2010. Here, the chartered accountants, they can play a very great role. Rather, I would say that the chartered accountants are working as a paramilitary force, and they are trying to safeguard the internal security of the country. So friends, it will not be very high expectations, rather I would say, if I expect from all the chartered accountants or from all the practitioners, even if they give a free consultancy in this area to the associations, organizations, or the companies, or to the individuals, those who are seeking foreign contributions. Friends, I would not like to be in between today's speaker, Isha, and you. So I hand over these things to Akshay. Thank you very much once again to all. Thank you very much. Over to you, Akshay.
Thank you so much, sir, for wonderful deliberation. Definitely, we as a chartered accountants are partner in nation building, and this Fcra Act will enable us to do our service in better manner. Friends, we have with us Isha Sekhri ma'am from Mumbai. To formally introduce Isha ma'am, may I now request Managing Committee member C.A. Swarupa Vazalwa to kindly introduce Isha ma'am. Swarupa, over to you.
Thank you, Akshay. Very good evening to all my dear friends and professional colleagues. Having said today's session or the top session, it's my pleasure to introduce you the important and significant speaker for today's session, Isha Sekhri ma'am. Isha Sekhri ma'am is a chartered accountant and is a partner in Ajay Sekhri and Company. Before venturing into her journey in the CA practice, she has also worked as a consultant with the media and entertainment practice of Ernst & Young. She has more than 10 years experience in the field of cross-border taxation, transaction advisory, structuring, and FEMA and Fcra. Her cross-border taxation experience involves providing advisory on inbound, outbound structuring, withholding tax implications, transfer pricing, and other aspects of international taxation. She is currently the co-chairperson of International Tax Committee of the Chamber of Tax Consultants, Joint Secretary of Managing Committee of International Fiscal Association, India. She has been speaker in conferences and in study circles organized by NADT, that is National Academy of Direct Taxes, Nagpur, Institute of Chartered Accountants of India, Bombay Chartered Accountants Society, and Chamber of Tax Consultants. To talk about her literary contributions, she is the editor of newsletter of the International Fiscal Association, India. She has contributed articles to book on media and entertainment industry, income tax review, compendium of on international taxation. She has also convened a book on media and entertainment industry for All India Federation of Tax Practitioners. With this quick introduction, I, Swarupa Vazalwar, once again welcome you to the forum, ma'am, on behalf of Nagpur branch of ICAI. Welcome, ma'am. Over to you, Akshay.
Thank you so much, Swarupaji. May I now request the Isha Sekhri ma'am to kindly address the gathering. Isha ma'am, over to you.
Thank you. Am I audible?
Yes, you are audible.
Good evening, everyone. And I would first like to thank the Nagpur branch of WRC of ICI for giving me this opportunity to present on the topic of FCRA. I feel really grateful to be in the presence of such people, and I'm really, really grateful for this opportunity. I'm going to share my screen for the presentation. All right. So today we will be discussing the Foreign Contribution Regulation Act. We will start off with giving a little background, which Sir also gave, and thank you, Sir, for giving that background as well. We will do some definitions, the applicability, the amendments that happened in 2020, and how FCRA actually applies in everyday life, which we may not be aware of. And also we may do some case studies around it. So let's start off, with the overview, right? So as Sir rightly mentioned, FCRA was introduced in 1976 during the emergency. It was basically introduced to check on the foreign influence in social, political, economic, and religious contributions in India. Thereafter, a stricter FCRA was introduced in 2010. Then there were amendments in 2020, wherein these amendments are all effective from 29th of September 2020. Now, how do you go about reading the FCRA, right? So there is an act. So there is the FCRA Act 2010, which gets amended from time to time. Then there are foreign contribution regulation rules, which were 2011 again, which are amended from time to time. And then there are FAQs, and then there are other notifications and guidelines. And all of this has been comprehensively captured on the FCRA website itself. So I'm going to just take you through the FCRA website. So this is the FCRA website, right? And I must say that it comprehensively captures everything you need to know on FCRA, right? All your questions and answers, whatever you have, are available over here. And whatever is not mentioned here, it means it's just not allowed, right? So whatever is allowed is given in clear terms. What is not allowed is basically everything else. Now, if you see the website, and this is the home page, right? So it has all the important links. It talks about which banks. Now this is, for the bank account, which banks are integrated with PMFS. What are the list of FCRA registered associations? So if tomorrow somebody says that, hey, I'm an FCRA registered association, you can actually go on the website and check whether this association is registered with FCRA or not. Then list of registered associations which have deemed to have ceased, basically that they had a validity for 5 years and they did not renew their registration. So whichever registration been granted prior permission, pretty much anything you want to know, you can find here. Then there are important notices that get covered here as well. So anything new that comes up comes here. If you file an application, you can track it here. You can check the validity of your and verify your FCRA certificate here. And the act is over here, the amendment to the act, right? So all amendments get covered here. The rules are here. Any amendments to rules, the notification guidelines, and the list of agencies not treated as foreign source. Then what are the services? What are the information banks? Any order circulars, the FAQs. The FAQs, I believe, are the most important because if you go through the FAQs, do understand a lot about it. Then the do's and don'ts, right? So they even have like PDF documents which talk about what are do's and what are don'ts, right? And these are very, very general in nature. Then there's a dashboard. So once you do a registration, you have a dashboard where you can, figure out what has happened. And then there is a contact us, which, gives you a list of the names, the telephone numbers, and how you can, write to them. So pretty much anything you need, please, you can simply refer the FCRA website, and it's very, very comprehensively given there. Now going back to the presentation. Now, as Sir rightly, Now, as Sir rightly mentioned, FCRA is applicable to the whole of India. It is applicable to individuals. It is applicable to all citizens of India, even if they are not in India. All right. So even non-resident Indians, okay, even to them, FCRA is applicable, right? And I don't know, a lot of our NRI clients know that FCRA is applicable to them. It is also applicable to associated branches or subsidiaries outside India of companies or body corporates registered or incorporated in India. Now, while you may say that the FCRA Act regulates the foreign contribution received primarily by NGOs, but since it extends to all individuals and persons in general, and this is, as Sir rightly said, to achieve the objective of protecting our country's national interest. Now, now most of us, when we study FCRA, we just assume it is applicable to NGOs, right? Because that is what is discussed the most. All newspaper articles will talk about NGOs, but nobody really talks about how it is applicable to individuals and entities other than NGOs. Now, if you read the preamble, it says that it is an act to consolidate the law to regulate the acceptance and utilization of foreign contribution or foreign hospitality by certain individuals or associations or companies, and to prohibit acceptance and utilization of foreign contribution or foreign hospitality for any activities detrimental to the national interest and for matters connected therewith or incidental thereto. Now, it talks about everything from national interest. It doesn't mention what is the meaning of detrimental. But it is really, really important. And as CAs, it is very important for us to know what this act is about and how we can guide our clients to go about following it correctly and appropriately. So now let's go to certain definitions under FCRA, because, we'll hear the terms foreign contribution, foreign source very often. So first, let's understand the definition and the meaning of foreign contribution. Now on this slide, what I have done is, because the definition is very, very important, I've just put up the whole definition and we'll go through it clause by clause. So foreign contribution has been defined under section 21H of the FCRA Act. It means the donation, delivery or transfer made by any foreign source, and we will come to the definition of foreign source, but it means donation, delivery or transfer, all right, which is made by any foreign source, one, of any article, not being an article to be given to a person as a gift for his personal use, if the market value in India of such article on the date of such gift is not more than the sum prescribed from time to time by the central government, by the rules made by it in this behalf. So there is some sum which is mentioned from time to time. Then you cannot do the donation, delivery or transfer of any currency, whether Indian or foreign, or of any security as defined under section 2H of the Securities Contract Regulation Act. And it also includes a foreign security, which is defined under section 2O of the Foreign Exchange Management Act. Now, what does the explanation say? The explanation says that a donation, delivery or transfer of any article, currency or foreign security referred to above by any person who has received it from any foreign source, either directly or through one or more persons, shall also be deemed to be foreign contribution within the meaning of this clause. So basically it can be direct or it can be indirect. Both get covered. The interest which is accrued on the foreign contribution which is deposited in a bank referred to in section 17.1, and we'll come to 17.1, that is the bank account that can be maintained, or any other income derived from the foreign contribution or interest thereon is also deemed to be foreign contribution within the meaning of this clause. So for example, an NGO receives 1 lakh rupees as foreign contribution and they put it in an FD, right? So the interest that accrues on that FD also is considered to be foreign contribution, and utilization of the foreign contribution has to be as per the FCRA Act only. The third explanation says that any amount received by any person from any source in India by way of fees, including fees charged by an educational institution in India from a foreign student, or towards cost in lieu of goods or services rendered by such person in the ordinary course of business, trade, or commerce, whether within India or outside India, or any contribution received from an agent or a foreign source towards such fee or cost shall be excluded from foreign contribution within the meaning of this clause. So basically, this clause has been added that in case you're doing any business, anything that is in lieu of goods or services, then that doesn't get covered under the meaning of foreign contribution under the FCRA Act. Now, under FCRA Act, because this is referred to a person includes over here an individual or HUF, an association, or a company registered under Section 25 of Companies Act 1956, now replaced by Section 8 of Companies Act 2013. Now, let's go on to who can receive foreign contribution, right? So any person can receive foreign contribution subject to certain conditions. One, it must have a definite cultural, economic, educational, religious, or social program. It must obtain an FCRA registration or a prior permission from the central government. And it should not be prohibited under Section 3 of FCRA 2010. Now, let's go to what is Section 3 of FCRA 2010, because the first two are pretty clear that it should have a definite cultural, economic, educational, religious, or social program. And if you have that, if you take a prior permission or you take a registration, then you can do it. But it should not be prohibited under Section 3. Now, what is Section 3? Section 3 basically talks about who cannot receive foreign contribution. So now Section 3 has 3 parts: Section 3.1, 3.2, and 3.3. Now, what does 3.1 include? So 3.1 talks about a candidate for election, a correspondent, columnist, cartoonist, editor, owner, printer, or publisher of a registered newspaper, a public servant, judge, government servant, or employee of any corporation or any other body controlled or owned by the government. Now, public servant was amended by 2020 Amendment Act, and we'll talk about it in a minute. The member of any legislature, a political party or an office bearer thereof, any organization of a political nature, any association or company engaged in the production or broadcast of audio news or audiovisual news or current affairs programs through any electronic mode, a correspondent, columnist, cartoonist, editor, owner of the association or company which is referred to above, and individuals or associations who have been prohibited from receiving foreign contribution. So if you see here, right, we only hear about NGOs, but all of these people, so basically when they talk about national interest, any candidate for election gets covered there. So if you understand the intent that it is national interest, then all of these people that they have covered here falls into place, right? Because if there is a person, even who is a cartoonist, but of a registered newspaper, right? If he receives certain foreign contribution and writes something against national interest, something like that also gets covered over here. Just give me a second. I think this, just give me a second, please.
Isha,
Sorry, just give me a second. I'm having some technical issues with the presentation. Just give me 1 second.
okay, ma'am. Till that time, friends, I request to kindly mention your queries in the chat box. Immediately after the session, we will take the question answer session as well. Thank you. Are you able to share the screen, ma'am? Isha, ma'am?
Yes, I am. I'm just doing that. Sorry, I think I was somehow sharing an incorrect presentation. I don't know what happened there.
Oh.
So earlier, I don't know, something went wrong there. So just give me a second. This is the correct one. Yeah. Okay. So sorry about that. All right. So coming back to who cannot receive foreign contribution, right? So as I mentioned, public servant, was amended. Now let's go to section 3.2. Okay, section 3.2 talks about no person resident in India, all right, and no citizen of India resident outside India. So let's be clear over here. This section 3.2 applies not just to a person who is resident in India, but also to a citizen of India who is resident outside India. All right. And such person shall not accept any foreign contribution, and they should not acquire or agree to acquire any currency from a foreign source on behalf of a political party or any person referred to in subsection 1. So in subsection 1 is all those candidates for elections, etc., whatever we covered over there. And or both, then no person resident in India shall deliver any currency, whether Indian or foreign. So what is important over here to note is that each subclause talks about who it is applicable to. So subclause 2A talks about a person resident in India and a citizen of India resident outside India. B only applies to a person who is resident in India. C then applies only to a citizen of India resident outside India. And these talk about any dealing in currency on behalf of a political party or any of the people mentioned in subclause 1. Okay, and there should not even be any reasonable cause by such person to believe that the other person to whom he is delivering this currency is likely to deliver it to a political party or any other person who was mentioned in subsection 1. Subsection 3.3 talks about that no person who receives any currency, whether Indian or foreign, from a foreign source or on behalf of a person or class of persons, which is referred to in section 9, and section 9 talks about the power of the central government to prohibit receipt of foreign contribution in specific cases. And again, they cannot deliver this currency to any person other than the person for which it was received, or if he believes or has reasonable cause to believe that they will deliver this to a political party or any other person mentioned in subsection 1. Now, what is important over here is to understand that you cannot deal in currency, and if you're dealing in currency on behalf of someone, please be mindful to follow all of these points, all right? And some of them which also apply to a citizen of India but who's not a resident in India. Now let's go to the other definitions, right? Because 3.1 talks about a candidate for election. So who is a candidate for election? A candidate for election means any person who's been nominated as a candidate for election to any legislature. Then what is a registered newspaper? A registered newspaper is registered under the Press and Registration of Books Act 1867. Then what is a political party? It means any association which is or in the body of individual which has registered with the Election Commission. And whatever is the definition of political party. Now, the 3-1 amendment to public servant was made in 2020. And then, until then, public servant was not covered under the definition in 3-1. Then it talked about that public servant means a public servant who is defined in section 21 of the Indian Penal Code. Now, Indian Penal Code defines public servant as all of these people which are mentioned here. Now, what is important to mention here is that while it has such a long list, okay, the normal definition of public servant is you generally think to believe that it is a person who is employed by the government. However, under this specific definition under the IPC, even certain persons who are not employed by the government could be considered as public servant. For example, an arbitrator, a liquidator, a surveyor. Now, jobs like an arbitrator and a liquidator are also performed by professionals like us, right? CAs, lawyers can all be arbitrators and liquidators, right? So it is very important to understand that if any of us or any of our professional colleagues are acting as such, what are they allowed to do or they are not allowed to do? Because for some time, they will be considered as public servant. So we need to understand what impact it has on us as well and our professional colleagues. Now, for example, if there is an Indian CA who is an arbitrator, right? And now say the arbitration gets completed. So there is no mention of what should be considered as the duration under which that Indian CA who is an arbitrator cannot accept a foreign contribution. There is no mention of a cooling off period. And we don't even know what is considered as reasonable. So if you are acting as an arbitrator or as a liquidator, please be very mindful of the fact that you cannot accept a foreign contribution at all under section 3 itself. Now, who cannot receive foreign contribution is covered by section 3. And then section 4 provides when section 3 will not be applicable. So basically, this particular section is very, very important because it helps us to understand that, yes, this is not covered by section 3, but all of this is then allowed. So what is allowed over here? Any income by way of salary, wages, reimbursement, right? Even it comes from a foreign source because it is for my business considerations. Any payment in the course of international trade, in the course of business transacted by us outside India. Any agent for a foreign source to any transaction made by such foreign source with the central government or state government. By way of a gift or presentation made to him as a member of any Indian delegation, provided that such gift or present was accepted in accordance with the rules made by the central government. So there are separate rules for retention and presentation of gifts. Then the other exemption is from his relative. Now this is very, very important because we should understand that any transaction I do with my relative, even if I'm covered under section 3, then section 3 would not be applicable and I would be exempted under section 4. Then if there's any remittance received in the ordinary course of business through any official channel or through any AD bank covered under FEMA. Now, any foreign contribution received by any person specified in section 3 for any of the purposes other than those specified under this section shall deem to have been accepted in contravention of the provisions of section 3, right? So anything that is not covered here is deemed to be in contravention of section 3. Now let's go to foreign contribution and understand certain important points here. So the first question is that, can a foreign contribution be received in rupees? So the answer here is yes. Any donation or delivery or transfer received from a foreign source, whether in rupees or in foreign currency, is construed as foreign contribution under the FCRA 2010. And such transactions, even in rupee terms, are considered as foreign contribution. So foreign contribution does not necessarily mean it has to come in foreign currency. It can come in Indian rupees as well. So for example, there is a person who was, a person of Indian origin, but, is given up Indian citizenship and residing abroad. And he makes a contribution, say, from his NRO or NRE account in India. That is also considered as foreign contribution for the purpose of FCRA. And the other question that we have already discussed a little is whether interest or any other income earned from foreign contribution will be considered as foreign contribution. It will be considered as foreign contribution because that is mentioned in the explanation 2 in the definition that we have discussed. The other question is that whether interest or any other income earned out of such foreign contribution will be shown as fresh foreign contribution received in that year or not. So the answer here is no. It is not considered as a fresh contribution received. Now, there is an annual return to be filed every year. Now, in the annual return, there is a separate column where such interest on deposits has to be shown. It is considered as foreign contribution, but it is not considered as fresh foreign contribution. Whether earnings from foreign clients by a person in lieu of goods sold or a service rendered is treated as a foreign contribution, the answer here is no, because this we have clarified at explanation 3 under the definition that foreign contribution excludes earnings from foreign clients by a person in lieu of goods sold or services rendered by it, as this is a transaction of commercial nature and it is for the business of the individual. The other question is that whether donation given by non-resident Indians is treated as foreign contribution. Now, contributions made by a citizen of India, right? A citizen of India who is living in another country, who's referred to as non-resident Indian in this case, from his personal savings through normal banking channels is not treated as foreign contribution because he is a citizen of India, even though he resides outside India. However, if you're an NGO and you're accepting donations from such a NRI or any other NRI, it is always advisable to obtain their passport details to ascertain that he or she is an Indian citizen and has not really given up their Indian citizenship. The other question is that whether donation which is given by an individual of Indian origin and having foreign nationality is treated as foreign contribution. So this we discussed, for the first question itself, that if a donation is received by an Indian origin person who has acquired foreign citizenship will be treated as foreign contribution. This will also be applicable to any OCI card holders. The other question is that whether foreign remittances received from a relative are to be treated as foreign contribution as per FCRA 2010. So the answer here is no, because as per section 4E and rule 6, even persons who are prohibited, but if it is from a relative and it falls under the exception, then it is not considered as foreign contribution. Having said that, there are specific rules that talk about disclosure of such foreign contribution, right? So you have to disclose it in form FC1 within 30 days of receipt of such contribution. If the contribution that you have received, either in money or money's worth, so even if you receive cash or you receive any asset or any shares of a foreign company, anything which has value of more than 1 lakh rupees has to be disclosed and intimated to the central government within 30 days of receipt of such a foreign contribution. Now, we had a case where an Indian person received a gift from her brother who was a foreign citizen, and this was in excess of 1 lakh rupees. Even when we received the money in the bank account, the bank refused to credit the money and said, please first file FC1. So they didn't even wait. They said, we will not credit this money until you give us a declaration that you will file FC1. You show us a draft FC1 filed online, and only then will we even credit the money. So banks are also now becoming very, very aware about the fact that a foreign contribution from a relative in the form of a gift needs to be intimated to the government, to the central government in form FC1. The next question is whether individuals who are not covered under Section 3 or a HUF, can they accept foreign contribution freely for the purposes listed in Section 4? So the answer here is yes, because even the persons specified under Section 3, the persons who are not permitted, are allowed to receive foreign contribution for the purposes listed in Section 4. And hence, in general, individuals and HUF are permitted to receive foreign contribution if it is for the purposes of Section 4. However, if it is, it should be that the monetary limit for acceptance of foreign contribution is ₹1 lakh. Can the fee paid by foreign delegates or participants for participating in a conference seminar be termed as foreign contribution? So the answer here is no. Any delegation or participation fees is not treated as foreign contribution, and hence no permission will be required under the FCRA Act. The other question is that under Section 2C1 of the repealed 1976 FCRA, it defined foreign contribution as the donation, delivery, or transfer made by any foreign source of any article, not given to a person for a personal use, if the fair market value exceeds 1,000. Now, what is the limit that is prescribed here? So here the current limit that is prescribed for personal use is currently 25,000. So the personal use limit is 25,000 and the gift limit is 1 lakh. Now let's go on to the meaning of foreign source. So we've discussed foreign contribution, and now let's go on to discuss the meaning of foreign source. Now, foreign source is defined under Section 21G of the FCRA Act, and this basically includes the government of a foreign country, any foreign company, any international agency, a corporation not being a foreign company but still incorporated outside India, a multinational corporation. Now, very important to note this point, that if it's an Indian company and incorporated under the Indian Companies Act 56 or 2013, and where more than half of the nominal value of the capital, so basically if it is a subsidiary of any foreign company or an individual or the citizens of a foreign country or any other corporation or basically any other foreign person, right, that Indian company also becomes a foreign source. It also includes any trade union in any foreign country, any foreign trust, a society or club, and any other citizen of a foreign country. Here it should be noted that a few bodies, organizations of the United Nations, World Bank, and some other international agencies and organizations are exempted from the definition of foreign source. And hence, if you receive any money, say from the World Bank or from United Nations, and the list of these exempted entities is available on the FCRA website, it's almost a 5-page list, then those are not considered as foreign source. As we discussed, what is important to note is that an Indian company, which is a subsidiary of a foreign company or any other foreign entity, right, or any other person holding more than 51%, is also considered as a foreign source. So if you are an NGO in India and you are receiving any donation from an Indian company, you also have to check what is the shareholding of that Indian entity, which a lot of us may not be checking. And I was also not checking until I read this act. So please be sure to check that in any NGO that you do. Please check that whenever they have received a donation from an Indian company, please take the shareholders of that Indian company and take a declaration from them that all of their ownership, more than 51%, is Indian. The other question here is that whether an individual of Indian origin who has acquired foreign nationality is treated as foreign source. This we covered in the foreign contribution itself. And yes, any individual of Indian origin, if he acquires a foreign citizenship, he also gets termed under foreign source. Then the other question is that for the definition over here, what is the meaning of a foreign company, which is mentioned in 3? So a foreign company is actually defined under section 21G, and it means any company or association or body of individuals which is incorporated outside India and includes a foreign company within, within section 379 of Companies Act 2013. A company which is a subsidiary of a foreign company, which we discussed already, or any company where the registered office or principal place of business is of a foreign address, and it also includes a multinational corporation. Now, a multinational corporation is separately defined, and it is defined to mean a corporation incorporated in a foreign country if it has a subsidiary or a branch or a place of business in 2 or more countries or territories, or it carries on business or otherwise operates in 2 or more countries or territories. Now, another question that comes along for this multinational corporation is that if it is a company which is incorporated in India but has operations in 2 or more countries, will that also be treated as a MNC under the FCRA 2010? So the answer here is no, because for the definition of MNC, it has to be a corporation which is incorporated in a foreign country. So if it's an Indian incorporation, but I have businesses say in 5 countries, that is not termed as a MNC for the purpose of foreign source, for the purpose of FCRA. The other important point that is covered here is foreign hospitality. Now, what is foreign hospitality? Foreign hospitality means any offer not being purely a casual one, which is made in cash or in kind by a foreign source for providing a person with the cost of travel to any foreign country or territory, or with free board, lodging, transport, or medical treatment. Now, who requires approval from the Ministry of Home Affairs before accepting any foreign hospitality? So here there is members of a legislature, office bearers of political parties, judges, government servants, and employees of any corporation or any other body owned or controlled by the government. So you have to be very particular over here to check that if you're an employee of any corporation which is owned and controlled by the government, you cannot accept any foreign hospitality. There is an exception over here which says that it is not necessary to obtain any such permission if it is for an emergent medical aid needed on account of a sudden illness which is contracted during a visit outside India. But where such hospitality is received, right, even in that specific condition, the person has to intimate to the central government as to the receipt of such hospitality within 1 month from the date of receipt of the hospitality and the source and the manner in which it was received. Now, supposing you receive a foreign, you take a foreign, say a judge, goes on a foreign visit for his personal purpose, and where all the expenditure is being met by him itself. Now, in that case, will they be needed to take approval? In that case, it is not needed because I'm spending my own money. And for example, you do need to take this approval. You have to file something called as Form FC2. All FCRA forms basically have to be filed online. So you go online, you register, and you make an application that I have received this foreign hospitality and I want to take this permission. Now, when you're making that application, you basically need an invitation letter from the host or the host country, and you also need an administrative clearance of the ministry or the department concerned in case your visit is sponsored by the ministry or department of the government. Here also, there is an exception that this intimation is not required if the value of the hospitality in the case of the emergent medical help is less than 1 lakh rupees. Now that we've understood, or at least tried to understand the basic concept of FCRA and foreign contribution, foreign source, and foreign hospitality, let's go on to understand how it actually works for NGOs, right? Because they are actually the most affected by these regulations and they have to follow them to the T. So, how do you take permission? So for example, now I'm an NGO, right? So how do I take permission from the government that to say that I'm going to receive foreign contribution for this purpose? So I want to take an approval from you. I want to take a registration, or I want to take a prior permission. So how do you go about doing that, right? So there are two ways of doing this. One is a registration. You can do a registration if you think that, first you have to fulfill XYZ conditions and you are going to receive foreign contributions from time to time. In that case, you don't need to take specific approvals each time, and that one registration is good enough. The other option is that if you're not eligible for the registration, then you can take a prior permission. Now, for the registration, there are a few conditions that you must fulfill. One, you must be a society registered under the Registration Act, or a trust under the Indian Trust Act, or a Section 8 company, or a Section 25 under the Erstwhile Companies Act 1956. Must be in existence for at least 3 years. This is very, very important. You should have undertaken reasonable activity in its field or for the benefit of the society. And you should have spent at least 10 lakhs over the last 3 years for the purpose of the activity that you are taking a registration for. In prior permission, now what happens is that I had a query just 2 days ago where somebody called me saying that, we are starting this university in India, but we've only started work for the past 8 months. And we want to receive foreign contribution. We know we are not eligible for a registration. Can you find a way for us to obtain a permission from the government such that I can receive foreign contribution? So I said, okay, why don't you take a prior permission in this case? They said, no, we cannot take a prior permission because prior permission can be only taken for a specific donor, right? So when I'm applying for a prior permission, I even have to give a letter from the donor and a letter of intent saying that I want to contribute so much. So they said, we don't have one donor. We have like 100 donors who want to contribute smaller amounts. Now for an organization like that, you maybe make a special application, but there is no provision under law under which you can actually make that. Now for prior permission also, you have to be registered under the Societies Act or the Trust Act or the Section 8 of Companies Act. And if you have not completed 3 years, and then you can make a prior permission application to the government and request them that for this particular donor, I would like a prior permission to accept this foreign contribution. Now, what are the conditions to be met for the grant of registration and prior permission? So the person who is making this application for the grant of registration or grant of prior permission, the first point is it should not be a fictitious or benami person, should not have been prosecuted or convicted for indulging in activities in relation to religious faith, should not be creating communal tension or disharmony, should not be found guilty of diversion or misutilization of funds. It should not be using the foreign gains for undesirable purposes, has not contravened any provisions of the Act, and has not been prohibited from accepting foreign contribution. Now, if you see these conditions, you will notice how the FCRA is for national interest and it is for maintaining the sovereignty and integrity of our country. Because in no other law, you will find such kind of conditions for just making an application for a registration or a prior permission. These are the other points that are covered over there. Now, the other question over here that comes is that can a private limited company or a partnership firm get registration or prior permission under the FCRA Act 2010? So the answer there is yes. Even a private limited company or a partnership firm, they can take specific permission. So you can take under specific permission over here if you believe that the cause that you're doing is going to be beneficial to the society. Now, let's understand the role of the executive committee. Now, what is important over here is to understand is whether foreigners can be appointed as executive committee members of an association which is seeking a registration or a prior permission. Now, organizations which have foreign nationals other than Indian origin, right, as members of the executive committee or governing bodies are generally not permitted to receive foreign contribution. So you cannot have foreign nationals who are other than Indian origin as executive committee members if you are applying for registration or prior approval. They may be allowed to be associated with such associations, maybe in an ex officio capacity, say if they were representing a multilateral body or a foreign contribution, which is exempted under the FCRA Act, or if they are acting in purely an honorary capacity, depending upon that person's stature in his or her field of activity. One may even give relaxation on a case-to-case basis if the foreigner, say, is married to an Indian citizen, has been working and living in India for at least 5 years, has made available specialized knowledge, especially in the medical and health-related fields on a voluntary basis in India in the past, is a part of board of trustees or executive committee in terms of provision in an intergovernmental agreement, and he's a person who is representing a multilateral body in an ex officio capacity. The other question is that whether government servants, judge, public servant, and employees of a government-owned and controlled company or body can be the executive committees or boards of association. So yes, even though they may not be allowed to directly receive foreign contribution under Section 3, they can be appointed on the executive committee. Now, let's understand what is the application process. So now let's understand that, I fulfill the conditions for either registration or prior permission. I'm sure that my executive committee does not include any foreign nationals. And then I can go on to apply for the registration or the prior permission. So other than the compounding application under FCRA, all applications, all forms are online. No hard copy or physical forms are allowed to be filed. So application for a registration has to be filed under FC3A, and application for a prior permission has to be filed under FC3B. All these documents that are mentioned have to be uploaded in specific format with specific size on the website itself. There is an online form that you have to fill. And there are instructions given on how to fill it. Once the document is uploaded and submitted, you cannot rectify an error in that case. In 2020, the government made the updation or registration with NGO Darpan as mandatory for all FCRA registered NGOs. So now you have to go and create a Darpan ID on ngodarpan.gov.in. The NGO Darpan is basically maintained by the Niti Aayog. It was started in 1st Jan 2015. It is a platform that provides space for interface between NGOs and key government ministries, and it is ultimately proposed to cover all central ministries, departments, and government bodies. There are certain mandatory documents that are required for NGO Darpan registration. So even after you do this registration or a prior permission, an NGO Darpan ID is mandatory to be created now. It's a one-time registration. There is no annual compliance and there is no renewal required for Darpan. Once you have done the application process, you have to pay the fees. The fees also has to be paid online. No checks, no demand drafts are accepted. So once you have done your application and you have received your approval, either for registration, your registration is valid for 5 years. Prior permission is valid until you have utilized the funds that you have received in the prior permission. Now, how do you do a renewal? So because your validity is for 5 years, 6 months before your validity expires, you have to apply for a renewal. You have to give the similar documents during the renewal as well. And you have to pay the requisite fees. If you do not apply for a renewal for registration, in that case, your registration will cease to be valid. And then you have to treat it like a fresh registration. Now, what are the annual compliances? So you have to file an online return as an annual return each year. The returns for financial year April to March have to be filed by 31st December each year, within 9 months from the end of the year. There have been certain extensions the last 2 years because of COVID, but generally there are no extensions. The annual returns have to be filed in a form called FC4, and you need to submit the audited balance sheet or a statement of receipt or payment, which is certified by a chartered accountant, along with the annual return. Even if you have received no foreign contribution, you still have to file a nil return. Only in that case, a certification by a CA is not needed. The consequences of not filing are that there could be an imposition of penalty for late submission, and they can also cancel your registration. Now, this is for a registration. What are the compliances? For a prior permission, you have to file annual returns till you complete utilization of the funds for which you have taken a prior permission. Now that we've understood the registration and the compliances, any acceptance of foreign contribution has to be only from a legitimate source and has to be only for activities which are prescribed under the FCRA Act. Now, for example, you have taken a prior permission, right? You can receive this money in installments, but it should only be for the specified amount for which the prior permission has been granted. It cannot exceed that amount. Now let's go to a very important part. This is on administrative expenses, right? So we have dealt with acceptance of the foreign contribution. Now let's understand the utilization of foreign contribution. And in this case, the meaning of administrative expenses and how they are supposed to be utilized is very important. So administrative expenses have been defined in the rules. Rule 5 of the Foreign Contribution Rules 2011 defines administrative expenses. It basically includes salaries, wages, travel, all expenses for hiring of personnel, consumables like electricity, water charge, telephone charge, cost of accounting for and administrating of funds, expenses towards running and maintenance of vehicles, writing and filing reports, legal and professional charges, rent of premises, repairs to premises, and expenses on other utilities. Now, there's a proviso here which says that if there is expenditure incurred on salaries or remuneration of personnel engaged in the training or collection of an association primarily engaged in research and training, shall not be counted towards administrative expenses. And another exclusion here is that any expense which is directly incurred in furtherance of the stated objectives of the welfare-oriented organization shall be included from administrative expenses, such as salaries to doctors of hospital, salaries to teachers of school. Now, why this administrative expenses is so important, right? Up to 28th September 2020, the cap on administrative expenses was 50%, right? So the erstwhile section said that in section 8(1)(b), shall not defray as far as possible such sum not exceeding 50% of such contribution received in a financial year to meet administrative expenses. With effect from 29 September 2020, with the FCRA Amendment Act 2020, this amount was reduced from 50% to 20%, and section 8(1)(b) was amended to read, shall not defray as far as possible such sum not exceeding 20% of such contribution received in a financial year to meet administrative expenses. Now, let's understand how does a typical big NGO work, right? So they will have a central administrative authority, they'll have a corporate office, they'll have a general office, they'll have work with other NGOs, they'll have accounts, reporting, they'll have cost of collection, there'll be some percentage of expenses involved in a project. And if there is a project which is wholly covered by FCRA, right? As it is, what happens is that corporate donations do not leave much room for admin expenses, because when you have to give them a utilization right, they also do not leave much room for admin expenses. And by giving this cap of 20%, we know of a lot of organizations that have had to close down because it was just not possible for them to maintain this. Here what is happening is that any NGO which does advocacy of rights, where your primary expenses are on salaries, right? Those kind of NGOs were hugely impacted by this amendment that had happened. Now, after this amendment, right, in the last 1.5 years, everybody's had to rework their budgets. And if your projected expenses on administration are more than 20%, you can make an application to the central government and request them to allow you to spend more than 20% on administrative expenses. We haven't had a case yet, under which the central government has allowed this, but the possibility of making an application is there. But because of this amendment, all NGOs have to be very, very careful on their administrative expenses, specifically for projects covered wholly under FCRA. All right, we've covered this. Now let's go to another amendment by the FCRA 2020, which is the Prohibition on Transfer of Funds. Now there are 3 kinds of NGOs. One which receives money from a foreign source and they execute the projects by themselves. Most of these NGOs are doing activities at a particular location. For example, they may be running a hospital or running a school. The second kind of NGO which receive money from a foreign source and undertake activities for different projects, but at a pan-India level, where they don't have the money to, the infrastructure to execute the projects themselves, and they do sub-granting to NGOs which are doing the execution at grassroots level. Most of the large foundations work on this principle. This also includes, say, a Tata Trust, which undertake policy and advocacy issues. The third type of NGOs are the ones that actually work at grassroots level, which execute the projects, but they do not have their own network to receive foreign funding, but get funded by an NGO, say, covered at 2. Now, for example, Tata Trust would give funds to an Indian NGO to make a documentary film on importance of educating teachers. Now, Tata Trust receives a foreign contribution. The Indian NGO will make the documentary, which does not have the network to receive the foreign contribution. Now, what this used to happen till 28th September 2020. With effect from 20th September 2020, you cannot transfer this money at all. There is a complete prohibition on transfer of funds. So the erstwhile section 7B read that you can transfer the funds to any other person if the other person is also registered under FCRA. Now you just cannot transfer this money. There is a 100% prohibition. So because of this, there have been a lot of NGOs which have had to close, especially which were working on grassroots level, and especially the ones who did not have their own funds. And they were completely dependent on FCRA funds from other large organizations and other large NGOs. So those NGOs have actually closed in the past 1 year. The other amendment that was made by the 2020 Act was opening of a bank account with SBI New Delhi. Now, what the Act says was that a FCRA registered NGO will have to open a FCRA account in SBI Sansad Marg main branch New Delhi for receipt of foreign contribution. Organizations which are located anywhere in India have to maintain a designated FCRA account only with SBI main branch New Delhi. They did give a SOP as to how you can do this without physically visiting the New Delhi branch. After this section has come into place, there was a transition period till 31st March 2021. But with effect from 1st April 2021, opening of the new bank was mandatory. Now, practically, even though the SOP was there, it took a really long time for most NGOs to open this bank account. Personally, we know that it took more than 6 months for most NGOs to open this account. And some of them were delayed beyond 31st March 2021. So if you are a chartered accountant who is looking at, a trust or an NGO which is registered under Fcra, please be sure to check whether they have received any foreign contributions beyond 31st March 2021 in any other account other than the SBI account. If your SBI account was not opened, you couldn't receive foreign contribution. That's it. You had to wait. Okay. So if your account was open, you could have received. If your account was not open, you couldn't have received. So if you are doing anything for any NGO for Fcra, please check whether all contributions have only been received in the SBI main branch account, New Delhi. Now, let's go to the other aspects of utilization of funds. So the first question here is that, can foreign contributions be invested in mutual funds or other speculative investments? So basically, say you're not, utilizing the funds just yet, right? So in the meantime, can you invest the surplus funds in mutual funds or other speculative investments? The answer is no. You can invest in a FD, but you cannot invest in any activity or investment that has any element of risk of appreciation or depreciation of the original investment, or which is linked to market forces. So that includes investment in mutual funds and shares. You cannot participate in any scheme that promises high returns, like investments in chits or land or similar assets not directly linked with the aims and objectives of the organization or association. Each NGO has to maintain a separate register of investments, and it has to be submitted during the audit. So if you are doing an audit for an Fcra registered organization, please do check the register of investments. Please ensure that no investment has been made over there in mutual funds, in shares, in speculative, in FNO, nothing of that is allowed. Only FDs are allowed. Can capital assets purchased with the help of foreign contributions be acquired in the name of the office bearers of the association? The answer here is no. Every asset purchased with foreign contribution should be acquired and possessed only in the name of the association, since the association is a separate legal entity which is distinct from its members and its office bearers. Can an association invest the foreign contribution received by it in profitable ventures and proceeds can be utilized for welfare activities? The answer here is no. The associations that are granted registration or a prior permission for receiving foreign contribution is for specific purposes and objectives only. It only has to be utilized for that purpose, and you cannot use it for any other venture at all, even if you're ultimately using it for welfare activities. But the first investment cannot be made in any other venture. Now, let's go on to understand that what is the procedure in case there is a change in the name, address, or objectives, or the FC account details. So the first question here is, what is the procedure for seeking a change in name and aims of and objects of an association under Fcra? For seeking such a change in the name, address of the association, you have to intimate again online in a form called Form FC6A within 15 days, and a self-certified copy of the amendment approved by the relevant authority has to be uploaded. And similarly, for aims and objectives, you have to file something called as FC6B. Then what is the procedure for change of utilization of bank account? For change of utilization of bank account, you have to give an intimation in Form FC6D within 15 days of such change, with uploading of certificates from concerned banks regarding the change. So pretty much everybody had to give this change when we changed the bank account. Whether any intimation regarding the change of members of the executive committee or governing council of the association is to be given to the government? The answer here is also yes. If at any point in time there is any change, you have to file it in Form FC6E to the Ministry of Home Affairs within 15 days of such change. So please understand that any change that happens, you have to inform them in the specified form in 15 days. It's a short window, right? But it is only 15 days. So any change at all, please be very mindful that the change has been communicated in the correct form to the Ministry of Home Affairs. If you're an auditor or you're consulting with any FCRA registered associations or NGOs, please check, please inform them. And if they haven't already done the intimation, please ensure that they do it now. If there is a compounding application that has to go along with it, please also file that. Now, let's go to the offenses, and then let's go to the compounding of offenses. Now, here is a chart which talks about, what are the offenses, right? So if you accept any hospitality, what is so there are specific, sections mentioned. And, this is just for information. So one can, the presentation will be shared and one can, read it at their leisure. Now, let's go to compounding of offenses. Okay. So section 41 talks about, compounding of offenses. And now how do you apply for a compounding of offense? Now, compounding of offense is the only section under which the application does not have to be filed online. It has to be filed on plain paper along with a fee, and it has to be done by way of a demand draft or a banker's check. So again, your payment does not have to be made online. This one has to be made by a banker's check or a demand draft and filed with the Ministry of Home Affairs. Now, there is no format of the compounding application. You can write whatever that you want in the compounding application. You can give your reasons and mention whatever, but it has to be filed on plain paper only. If after the compounding, the person is unwilling or unable to pay the penalty imposed, then the prosecution gets, the prosecution gets initiated in that case. And the investigating agency over here is the Central Bureau of Investigation, which, kind of then decides about the prosecuting a person for a violation. Now here I want to take up a small case study. This has genuinely happened with us, and we have done a compounding application for this one. So during the COVID year, okay, there was a particular FCRA registered entity, right? And this is also the year where the amendment happened, right? So peak COVID, right? 19th May 2020, what they did is they through a Gurudwara, they gave food packets for COVID affected people. Through an association, they gave food packets for COVID affected people. Now these were donations up to 20th, September 2020. And these entities were not registered under FCRA. But please also see the conditions under which, right? COVID had just started. And all they were trying to do was help people. Whichever account they found money in, they kind of used it. Okay. Then they did further, Anaj Dan project. Again, to somebody who was not registered under FCA. Then they did Anaj Dan for COVID victims. Again, not covered under FCRA. And then they, kind of did a Rural Development Foundation one, which was covered under FCRA, but this was beyond my 28th September due date. And, I had a complete prohibition on transfer of funds itself. Now for something like this, right? And this entity actually does, work for at least 2 crores each year, right? And they do so much for the welfare of the people. And for something like this, we had to apply for a compounding. Our compounding application, we explained the whole thing. We explained COVID. We explained that, it was, and because when it came to the auditor to check, the auditor said, I cannot sign this. And he said, until you file a compounding application, I cannot sign this ballot, this at all. I cannot give you FCRA certificate at all. So we did this compounding application way back in August or September of 2021. We have been following up, but we have not even received a reply from the FCRA authorities today. But something like this, which is not covered anywhere, you have to simply do a compounding application. There is no other option. Then let's go to suspension, cancellation, and surrender of registration. So the first question here is, can the government cancel the certificate of registration granted to a person under FCRA? The answer is yes. They may cancel the certificate, under section 14, there are conditions given, right? So once the person's certificate is cancelled, they are not allowed, they are not eligible for either registration or prior permission for 3 years from the date of cancellation of such certificate. This is a very important point to note, that please do not violate the provisions of section 14, because if you do and your certificate gets cancelled, you cannot get another one for 3 years, either registration or prior permission. Then can the government suspend the certificate of registration? The government can also suspend it and not cancel it as per provisions of section 30. They may do it for up to 6 months at a time. Then what are the consequences of suspension? So once a person's registration has been suspended, they cannot receive any foreign contribution during the suspension time. And, they cannot utilize the unutilized foreign contribution without prior approval of the central government. Then is surrender of registration. Now, any organization who wants to close its FCRA registration for its own reasons can do so by suo motu filing a form FC7 on the web portal. And, all the physical assets and unutilized foreign contribution that exists on the day of such surrender, they generally mention in the order how that should be dealt with. So the government itself mentions it in the order. Now, before we go to some other case studies, let's understand what is it for CAs under FCRA, right? And how, what is it that we have to do? Like how Sir mentioned that, you can even do it consultation free of cost for clients because nobody is aware, right? So we have to examine and audit all the relevant books of accounts and bills and vouchers of FCRA associations. We should inform them of any violation that is happening. We should help them. We should study FCRA first in detail and then help them. We should conduct even a forensic audits to ensure that the receipt and utilization of foreign contribution is within law. We should provide them for, proper guidance. So this is how CAs, are involved in the FCRA Act. Now we're going to take up, 2-3 case studies, and then, we'll open the floor for questions. Now, let's understand how FCRA is applicable to crowdfunding, right? So, there was a foundation which was providing assistance to COVID-19 patients on a crowdfunding platform called Keto. And they were receiving donations through foreign sources, right? Now, this particular foundation was not registered with FCRA, but they were going to tie up with United Way of Bangalore to accept the foreign donations, okay? So please understand that any crowdfunding also, whether by an NGO, whether by any other person, cannot be done without an FCRA registration. And FCRA registration is mandatory if you're doing crowdfunding, which is coming from a foreign source. This is something that, people are not aware, and they just go on the crowdfunding platforms and, kind of do this. But this is actually not allowed, and it's a violation of the FCRA Act. It actually happened in another case of ours as well. We have a client who runs a social impact company, right? And, she's engaged in educating teachers and providing education at, in smaller towns and villages. She's not registered as an NGO, but just a social impact company, which is for profit. She did a crowdfunding campaign where she, kind of raised X amount of money through crowdfunding, which included foreign sources, right? And she was just not aware that this was going to be subject to FCRA. The problem was that the money was already received. The money was also utilized, right? Before it came to us for an audit, and we had to tell her that this money was not allowed to be received. We had to go for a compounding over there as well and tell them that, she did not know. And as soon as we came to know, we did tell her, and, she came voluntarily and said that I was not aware of a prior permission, I was not aware of a registration, but I have taken this money and this is how we have utilized it. They did levy some penalty, but they were decently lenient with us on an overall basis because they did understand that she did it because she was just not aware, and it all went to a good cause. And as soon as she came to know, she did inform them and went for a compounding suo motu over here. So again, this is a violation. So another case is somebody who's a journalist, right? And if he does a foreign crowdfunding as well, it is a violation because he cannot accept any foreign contribution under section 3(1)(b) itself. Now let's understand what happens to an individual, right? And you receive and how is FCRA applicable to gifts from relatives who are foreign citizens. So let's take an example of a person who is a citizen of India and resident in India. He has a brother who is citizen of Australia, and this brother has gifted him shares of a Singapore company. And the value of this gift is more than 1 lakh. So in this case, because his brother, who's a citizen of a foreign country, even though person of Indian origin, and he's gifted him shares of a foreign company. So foreign security is covered under foreign contribution as well. He becomes a foreign source because he's a citizen of a foreign country. And the value of those shares. Now, how do you value the shares of a foreign company, right? So what we did over here is we took a specific valuation report from a merchant banker in India who valued the shares of the Singapore company, said yes, the amount of the value of these shares is more than 1 lakh. And then we filed Form FC1. And the problem here was we tried to file FC1 and the FC1 online utility just was not working. We tried for a lot. We tried within 30 days. We tried within 60 days. We raised the CP we said your FC1 is just not working. Please help us. We ultimately had to file hard copies even though it's not allowed. But just letting you know that tomorrow, if there is a query raised as to why you did not file FC1, we have enough screenshots to show that the portal was not working. This was also during COVID, where there was nobody at FCRA who was even answering the phone calls. So we couriered the hard copies, we filed CP, we filed grievances with FCRA itself, and said that we are unable to file this, but we do want to intimate to you that we have received these gift of shares. Similarly, money, any money that comes in which is more than 1 lakh, please be sure whether or not your bank tells you to file Form FC1 within 30 days. FC1 can be filed online. Now the portal is working, but in case it doesn't work, or in case it doesn't work for any form, you can raise a grievance. And we have filed hard copies in the past when the portal was not working from a defense mechanism in case they ask us, why didn't you file it in time? So now let's look at this particular case study where Richa is an Indian citizen and it's her birthday. So there is Sunena, who's also an Indian citizen but residing in the US, and she gives her shares worth 1 lakh. Now in the first case, because Sunena is an Indian citizen, she is not considered a foreign source. Hence, FC1 is not required. There's Charles, who is a foreign citizen and relative and gives her 2 lakhs. Sorry, that's supposed to be 2 lakhs. For that, FC1 is required because one, he is a foreign citizen and the amount is more than 1 lakh. Then there is another person called Sanskar, who is a PIO and being a relative is gifting her a neck piece worth 80,000, which is backed by a valuation report. Here it is not required because even though the person is a foreign citizen, the value of the gift over here is less than 1 lakh rupees. Let's take another case study here. There is Mr. Rohit Gandhi, who is an Indian citizen, and he went to the US in the year 1995 for the purpose of employment. Since then, he is living in the US. Now he proposes to donate a sum of 60 lakhs to his school in India. Now 25 lakhs is coming by way of a direct remittance from his bank account outside India. Then 10 lakhs is 15 lakhs is coming from his NRE account in India. 10 lakhs is coming from his NRO account in India. And 10 lakhs is coming from his son's bank account, who's a citizen of US. So in this case, whatever Mr. Rohit Gandhi sends, right, either by way of a direct remittance or through his NRE account or through his NRO account, since he's an Indian citizen, he's not considered a foreign source. So 25 plus 15 plus 10, 50 lakhs will not be considered as foreign contribution. But he's also requested his son to pay the balance 10 lakhs. His son, though, is a citizen of the US. So when the son makes the remittance, only 10 lakhs will be considered as foreign contribution. Let's take another case study, and then we'll end. So this also actually happened with us. Google has a startup mentorship program which grants to companies, which gives grants to companies all over the world to support the artificial intelligence sector. Now, what it does is, all companies can apply for this particular grant. And if you win it, Google gives you XYZ amount. There is nothing you have to give to Google in return. So there are no services, no goods, no nothing. It's a pure grant that Google is giving you, right? Because it wants you to do well. Okay. Now, an Indian company has now won this fund, right? And as per the agreement with Google, the grant should only be used for eligible expenses, like an engineering project, engineering cost, project expenses, your CTO salary, basically to better develop the technology of AI. Now, in this case, would FCRA be applicable? So here our view is that because Google is a foreign source, right? The amount that is being given is a foreign contribution. I am an Indian company. I am not doing this in the course of my business. My business is AI services, but Google is not taking any services from me. All Google is saying is, I believe in you. I want you to do well. As a part of my mentorship program, I'm going to give you these funds for no consideration. I don't want anything back from you, but the money that I give you can only be utilized for XYZ purposes. They can only be utilized to better your technology. Can only be utilized for this particular project or this particular expense. Even in that scenario, FCRA does become applicable because Google is a foreign source. This is money coming in as foreign contribution. I'm an Indian company that does not have a registration. So before even receiving this money, I have to take a prior permission from FCRA authorities that I'm receiving this money, which is without any consideration and hence covered under the FCRA Act. With this, we have completed our presentation. I, open the floor for any questions.
Thank you so much, Isha ma'am, for wonderful, elaborated description on FCRA, right from registration to compliance and then how to handle the litigations. You have covered everything. And after taking the presentation in question answer form, I think there are very few questions left out of the questions raised also. So, but still for the sake of convenience, I'm reading the queries which are present, ma'am. One of the queries is, what are the FCRA implication on individual who is OCI and is working in Canada? He sells his property, principal house there and remit the funds to his Indian account. For the current financial year, he is resident Indian as per Income Tax Act.
So he's an overseas citizen of India. So I'm assuming he has maybe a Canadian citizenship. If he sells his house over there and remits to his Indian account, that is not a problem. The issue is only if he's sending this money as to an FCRA registered or he's giving it as a donation to someone. If he's remitting to his own Indian bank account, that's not a problem at all.
Okay. So it will not come under FCRA purview.
Because it has to be for a specific reason, right? If I'm transferring my own money from one account to the other account, that is not covered under FCRA. It may be a foreign contribution in that sense, but it is not covered under FCRA.
And ma'am, if the funds are transferred to his Indian relatives in that case?
So Indian relatives, then it will come under the gift regulations. And if it is more than 1 lakh rupees, then you have to file, the relatives in India have to file FC1 if it comes as a gift. So for example, he takes this money and he gives his father, either after he transfers it to India or even directly from his Canadian account. In that case, if it's more than 1 lakh, then you have to file FC1. And if he uses it to give a donation, then that entity has to be registered with FCRA.
Right. Ma'am, another query is whether gift in the form of money or shares of Indian company received from NRI to his relative resident Indian will be covered under FCRA Act. I think you have covered that, but still.
Sure, I'm just going to read it again. Whether gift in the form of money or shares of an Indian company received from an NRI to his relative resident Indian. So basically, if the NRI is an Indian citizen, then it is not covered under FCRA. If the NRI is a foreign citizen, then it is covered under FCRA. As long as he is an Indian citizen, it is not covered.
Thank you so much, Isha ma'am, for wonderful deliberation. I know there are a lot of queries once we close the session. So I request you, if we can send you the mail of queries received from the members.
Sure, that's not a problem.
Thank you so much.
Actually, the point is because it's a fairly new thing for people to understand. It's a lot, and once you start doing it, then you have queries actually.
Right.
What I've realized, yeah.
On behalf of Nagpur branch of WRC of ICAI, I thank our keynote speaker, CA Risbud sir, for sparing his valuable time and joining the session. I equally thank CA Isha ma'am, Isha Sekhri ma'am, right from Mumbai, for wonderful, elaborated, I would say the presentation was there, and I hope all the members got benefited because of this session. Thank you all the participants for joining in large number.